Before that, though, thousands of homeowners across the Anglia region who took out some of the lowest ever mortgage rates are being told to brace themselves for a rise when their deal ends.
Yes, brokers are reminding people to switch their deals now rather than falling onto the bank standard rate, which could see monthly payments soar.
Matt Price takes us through it all.
It's often our biggest asset, our most expensive purchase, a nest for raising a family. But owning a house costs, and that cost could soon soar for thousands of homeowners whose mortgage deals are about to end.
The Bank of England has made money cheaper, credit easier and pumped billions more in cash into the UK economy. Interest rates were cut to a record low of 0.25%.
That was back in 2016, and those Bank of England base rates meant record low mortgage deals. In recent years, some at less than 1%. And many of those fixed deals are coming to an end, and that could mean homeowners move to a more expensive tariff. Jonathan Davis is a financial advisor in Hertfordshire.
We're finding with inflation gradually trending up, this is going to have an effect on interest rates. They're likely to rise, not necessarily this week or this month, but in due course. So it's going to affect people whose fixed rate mortgages are coming to an end. They're going to find that their new interest rate is going to be significantly higher.
And it could be even more expensive on the bank's standard rate. ITV News has been number crunching and found for those whose mortgage deals are coming to an end this week, failing to shift could cost. Our house here costs £200,000. We have a mortgage in place of £160,000 and paying it over 20 years. With an average 5-year fixed deal, we've been paying £950 a month. But when the bank's standard variable rate kicks in at the end of the deal, payments will increase to £1,047. That's a difference of almost £100. And it's even worse for those on a 2-year fix. A payment of £836 a month goes up by £211 every month. There's also the issue of Bank of England base rates to consider. Mark Carney will chair his final meeting as governor this week to discuss it. Today it's 0.75%, with some experts predicting a cut. But as we all know, rates can go both up and down.
Last year we saw a rise in repossessions, so it is a possibility even though interest rates are so low. But we have a lot of people, particularly those on universal credit, who are really struggling actually to make ends meet day to day. And the mortgage is quite often, of course, the biggest bill that they have.
Historically, rates are still very low. Under Margaret Thatcher's government, they reached 17%. But it's true, even very small changes in 2020 could ultimately cost us all a little bit more every month. Matt Price, ITV News.